Welcome to the Real Estate Investor Podcast. I'm your host, Gary Lipsky of Break of Day Capital. I talk to leading experts to discuss a wide range of subjects to educate investors on best-in-class practices to build legacy wealth and positively impact communities. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Investor Podcast. I'm your host, Gary Lipsky with Break of Day Capital. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices.
Choosing the right insurance coverage for multifamily properties isn't that complicated if you know who to talk to. At the Garzella Group, we're uniquely qualified to help you navigate the range of policy choices you have, and we're committed to saving you 30% in the process. We do intensive market research and have nationwide relationships, so we can find coverage other insurance brokers simply can't. We should talk. Go to quotenow.biz and we'll start the conversation.
Today on the podcast, we have Chris Seveney. Chris has been a real estate professional for more than 25 years, known for his honesty, tenacity, and professionalism. Chris managed over $1 billion in real estate and has built his note investing portfolio to over 500 deals valued around $75 million. Thanks for joining us, Chris. Can you start by telling the listeners a little bit more about yourself and what you do?
Yeah, thanks, Gary. So last year, I made the decision to leave the W-2 world after working in real estate for over 25 years, like you mentioned, and start a real estate fund with co-founder Lauren Wells, who's out of just north of you in Santa Barbara. And it was mainly focused on notes. And I'd gotten in notes about 7-8 years ago after my wife and I were doing some local real estate in Washington, D.C. area, and we had little kids, and we just got burnt out from it. And notes was something that can kind of do anywhere, anytime, and found a love and passion for it. So started doing my own notes, raised some money through some funds, and then last year, like I said, made that leap into the note space. And I do look back and reflect upon my career in real estate and having worked for developers and general contractors, of managing project management, understanding construction, understanding real estate, really was the crux for really advancing my career. Once I finally made that decision to leave that W-2, which a lot of people sometimes are afraid to do.
Yeah. Congratulations, by the way.
Thank you.
That's what I love about real estate. There's so many great ways to make money in it, but I do feel people do have to focus. When I started out in real estate full time, there's so many, it was like scroll factor, and there's so many different ways. It's like you have to narrow your focus. Obviously, you have a wide range of experience. So why note investing for you?
Yeah, great question, because you're right. I see a lot of people who do multifamily, then they shift to short-term rentals or commercial. And, it's okay to do that, but you want to make sure you're an expert in at least one of them. For me, it's interesting because I love development. I've been, done a lot of it. I love construction, but I also, remember all the headaches that went along with it, and the headaches of owning a multifamily building or running a project like that. With notes, of course, it has its own different headaches. But I, ever since I got into it, I really just love the passion, the ability to problem solve, because it's a lot of problem solving where we're buying distressed debt. And it's really like gamified, because it's you and a borrower and you don't know what their move is, but every move they make, you can make it's like playing chess. You can make another move to it. Also, I'd say the competition factor has been another reason why I've wanted to get involved in it, because there's people who are, buying one-off notes or, smaller portfolios. And then you have the giants, who are, buying hundreds and, billions of dollars in this thing. We want to get to between, 150 and 250 million, because there's a space that there's not a lot of competition in that realm. So.
Yeah, absolutely. So I with different asset classes comes different times in the cycle to take advantage of opportunity. What's the best time in the cycle for you guys to take advantage of that opportunity?
Yeah, typically in times of distress. When you think about, most people who probably own a mortgage. And a lot of people think when house prices start to decrease, that could be a note investor's dream. It really isn't, because, my house goes down 10%. I don't care as long as I have a job. So jobs is a big indicator of the note market. And it's interesting because we're at a point in time today with a lot of unknowns, because unemployment's all-time low. Distressed borrowers is an all-time low, but the commercial side of things in the regional banks are imploding. So we're starting to see that happen. And what it's allowed us to do is, as part of our model, we're having a lot of opportunities now with investors who own 10 single family rentals and have a lot of equity in it, but a bank won't give them 5 different loans or a portfolio loan to go do that next project. So that's an area where we've been able to work. But our primary non-performing stuff is typically when unemployment goes up. That's when we start to see levels of distress. But we're still talking about, typically between $300 and $500 billion of distressed residential loans at any one point in time. So when we look at our size compared to that, we're just a fly on the wall compared to the overall market. So for us, it's not as challenging to find product.
And that's a really, really big number, but give me the scope of that, because that's probably like a tiny fraction of all the mortgages out there.
Yeah. So there's about, on residential, it's about 13, it floats about $13 trillion in mortgages. And it's actually, stabilized a little bit because of how rates have gone up the last several years. People have, properties have gone up, bigger mortgages. So you're looking at a $13 trillion industry. And at any point in time, it's, historically, it's usually around like 4% to 5% delinquent, which is, over 500 billion. But I think we're floating right now between 2 and 3% on the delinquency side of things. So, so to kind of give you a scale of how big the market is, it's humongous.
Yeah, absolutely. And are you focused, how many notes are you buying at a time? And are you focused on a certain region that you prefer?
Yeah, there's, regions I'll say are less or more pessimistic about. Typically, for example, like the Northeast and the Northwest. And why is because the foreclosure timeframes on those states are years. And, as you get to the central part of the country and kind of the Midwest and Southeast, most of those states are what's called non-judicial. So you don't have to go through a lengthy legal process. So typically the majority of our assets are in the Midwest and Southeast. We also focus on, I'll call it, middle income homes. And, that's very different in California than it is in Ohio. So when people say, what's your loan size? I'm like, well, in Ohio, it might be 100 or 150,000. In California, it might be 600,000, but it's still a middle income home. So that's kind of, what our target is. We've invested in over 40 states. And like I said, there's certain states we like better than others, but, so. Yeah.
And what's one of your biggest lessons that you've learned from being in the note business?
Oh man, lots of lessons learned. So, one of the biggest, I think, getting into the space, it is a, conflict-oriented business, and you have to manage a lot of vendors. Managing attorneys is a lot harder than I thought it would be. A lot, just like I'd say teachers, I put attorneys and, even doctors, extremely highly educated, 10 times smarter than me. So, I look at them and basically think that they would be on top of their game and like, managing and always doing things on time. They're like your kids. You have to manage them. You have to make sure, the room is clean, that they're filing the paperwork in proper time, that the information is correct on it. I'll get information that they'll send me. It's not even my entity. They put the wrong entity on it. So I think that's one of the major lessons learned that throughout this. And the other that I'll mention is, just because a law says one thing doesn't mean a judge is going to do that. They may have their own interpretation on things. And you can't, when that does happen, you can't blame anybody. I know some people will blame the attorney, blame the servicer. It's just, it happens. And, you just got to deal with it and keep moving forward.
Yeah, and these are really good lessons, I think, for anyone to apply on whatever they do in real estate.
Yeah.
Because, I mean, as a business owner and like you, it's herding cats half the time.
Yep.
Lots of follow up and prodding people to get things done
Mhm.
and do it right.
Yep.
And lots of curveballs and just because you think it should go one way, life doesn't work out that way. It's not as simple as that. And just you got to keep problem solving and problem solving and problem solving and working through. So yeah, that's
Yep.
excellent advice. Um, what for someone that wants to just get started in note investing, where should they start? What are the some of the best advice that you would give to someone?
Yeah. So I always give, and again, some of this advice might be generic because it can apply across any type of, real estate education. And I always recommend people to start with the free resources, the Facebook groups, the bigger pockets, the YouTube places. Start there and start at writing down questions that you have. I do this, and this is kind of something probably where I make mistakes too. I get so excited about something new, like most people do. You rush to buy some course or you rush to get into something, and you don't know what you don't know, but you also don't know what is and isn't important. So you may be absorbing a lot of information, but it's kind of like stuff that you really kind of don't need to know, and you're missing the big picture on a lot of these things. So that's where, I always recommend people is to start out, on those avenues of, looking it up in YouTube, and you'll find kind of who the people are. We keep a resource compilation that we share. For someone says, hey, how do I get in? Here you go. It's 10 places where you can go learn about notes. It gives some book recommendations, some podcasts, and then places you can go buy notes, because that's a question we get a lot of who do you buy from? And it's relationship based, but you can start reaching out to those people before you're even ready, just to start building that relationship. Similar to in real estate, hey, I want to buy a quadplex in Houston. Well, start reaching out to some brokers and just start introducing yourself to them, even though might not be ready yet, but you got to start somewhere and start, warming that relationship.
Yeah, that's great advice. There's so many free resources. I wish when I started there were so many of those resources, but there just wasn't. But
Yeah.
and yes, be careful. But joining courses, masterminds, everyone it seems like has a mastermind, whether they've done one deal or 3 deals. It's just a rapidly growing business,
Yeah.
and really vet who you're going to work with.
Yeah. And now you're seeing, people who've been in real estate the last 3 years, which is like fishing in a barrel, honestly. It's like buying scratch tickets where everyone's a winner, essentially. And they're writing books now about all their successes. And, I look at, someone like yourself or myself who's been in it, an extremely long time. And, our main focus a lot of times is getting the deals done. So.
Yeah. Yep. Yeah, absolutely. Well, Chris, you provided a ton of great information on note investing. Where can listeners find out more about you and your company?
Yep. So you can go to 7einvestments.com. That's the number 7, the letter E, investments.com. I'll find out more about the company. If you want to learn a little bit more on note investing, you can listen to our podcast called Creating Wealth Simplified. We rebranded. It used to be called Good Deeds Note Investing. So the first 150 plus episodes is my journey into note investing. And basically talking about all the trials and tribulations that all those gurus and those masterminds don't teach you, that many people probably look for that. But yeah, those are the two. I'm on LinkedIn, Facebook. You'll find me on social media. My last name is pretty unique, so it's pretty easy to find me.
All right, awesome. Well, if you want to get into note investing, definitely check out Chris's podcast and his website. Thanks so much for joining us. I'll be back next week with another informative episode on the Real Estate Investor Podcast.
Thanks for having me, Gary.
Absolutely. To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and subscribe, and leave a review, as it will help us reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website at breakofdaycapital.com and sign up for our newsletter and fill out our investor application. We'll talk to you next week.